Alright guys, welcome back to the LPR Trading Group YouTube channel. I've got another video for you today. Today's actually another live trading video, so this is just like raw, unedited, uncut. I think it's 45 or 50 minutes of the open session here. I took 2 trades, 1 loser, 1 winner. I was on screen share in the chat room, so the screen you're going to be seeing here and all the banter that's going on, all the chatter that's going on, this is super raw, right from the chat room, what we talk about all the time, like day after day, day over day in the chat room. So you're going to hear like this is like real live in-depth chat room stuff. And like I said, I took 2 trades today. I'm not going to tell you timestamps on where and when I took the trades, because if you're just going to skip to those areas, you're going to miss so much important information in between the trades where we're planning out the trade. We're telling you exactly what we're looking for essentially. And we're setting ourselves up to get into a good trade, going through all of the market possibilities, the current market context, so on and so forth. What I'm going to do, I'm going to leave this video with you guys. Make sure you like, comment, subscribe. Leave a comment down below. I guarantee I'll get back to all of your comments within a very, very reasonable time. And if you ever want to have a chat, even a one-on-one chat on Discord, I'd be more than happy to give you my Discord handle. You can add me to a friend, and we can have a chat. Thanks, guys. Enjoy. So I'll be rambling till about 10:30 today, and then I have a quick 10-minute meeting or so. So I'll have to just mute my mic and AFK there for a minute, just to give you guys a heads up. Market's going to open here right now. Good luck.
Good luck, everyone. Stay safe.
This bothers me that I have no data in here. Feel like I'm trading in my underwear with no chart. No rush here to get the trades off the open. I always have this mindset. I'm going to wait for the first 15-minute initial bounce. I'm just going to wait for it. The only way I'll take a trade outside of waiting for the first 15-minute initial bounce is if we get something like, top tier. We come into a pivot. We're obviously trapping. We're showing imbalances in a given direction, and we're at a level or a zone. Then I'll usually dabble in that area. But the open trades are going to be smaller, quarter size, 1/5 size, stuff like that. There's so much time in a market day, you do not have to get involved in this mess off the open. You want to start getting into trades when the market starts ebb and flowing. This is not an ebb and flow. This is mass mayhem here. Large exchanges of orders coming in. No very obvious directions, and no one has control just yet. It's price discovery for a reason. So to grip and rip the open, in my opinion, is slightly on the sketchy side. Some people do it well. I don't. So I stay away.
It's called gambling.
Roulette, baby. Yeah, it's weird, Hunter. I don't know. Mine have never been like this. Hoping it was just a rhythmic data error overnight and that they don't have data to provide. I don't know. It's what it is, I suppose.
Really big range so far. 40-20 all the way to 40-30, 10-point range in the first 3 minutes. That's pretty interesting.
That would be high a day and low a day by the end of the day.
Just my luck, yeah.
Sellers are trying to shut down the highs here a little bit, but again, we're 3 minutes in, price discovery. Typically what happens here is you'll get sellers shutting down highs, you'll get buyers also buying up lows. So it's, again, just a tough place to be executing off of. And again, CD off the open is less than trustworthy. So I really don't even have any regard for CD until we're about 5-6 minutes into the market. Price starts ebb and flowing a little bit better, and then CD smooths out, and it could give us some trade ideas. There's just a big base going on here overnight. So you've got this large base, and where this gets interesting for trading or price, if we were to just draw like a box sort of around this whole base here, where are the high emotional trades, right? Where are the high emotional areas? It's going to be above the base and below the base. So we can look for a few things here. If price breaks above the base and we have divergence on CD, possible shorts above the highs. On the flip side, price could break above the base, hold, get strong, push. Now we're looking for pullbacks into this area, hold, possibly new HVCs, and then we go for longs. Same thing on the bottom side. If we get a break below the range, which is the high emotional, high impact area, we could possibly trap below the range, hold, and go for a push to the upside. Or if we get below the range, hold under and push down. This is where we have to start doing our analysis when we start breaking highs and lows of this range. Until then, we're inside the range. It's going to be a little bit tougher to trade, and to me, it's just a diddle in the middle. So 41.41 was the high of this range, so I'm just going to mark it right here. We'll see the reaction up at the highs here. Until we get through this yellow line, we're still in the range that we just talked about. And for me, I don't really want to play it. The range is 41.41 by sort of 07. We're in like a $30 range here. Play the extremes. Wait for the extremes. Because you think about it this way. If we let price break out, right, it's going to tell us a few things. It's going to give us additional pieces to our puzzle. What's it going to give us? I'm breaking out, CD's weak, we're getting imbalances. Okay, we can short at the extreme 41.42, 41.43. What are our targets? 07. So we're looking at $30, $35 targets. Or we don't get imbalances, CD's not weak. Okay, you've confirmed that you broke out. You're possibly going to want to hold pullback so we can look to get long with the trend. Instead of bad retail buys here, it gets up here, and now this is the high impact area where the trade could or should work. And they're just completely rolling the dice saying, gosh, I hope you break out and keep going. Sometimes they win, most of the time they lose. I was really hoping for something down to the low of this range rather than a push off the open. I did sort of want longs today. I wanted this. Something in here. So pop right into the range high, and you see the reaction off the range high. Whether this holds or not, we don't know, but we do know that we're getting a reaction off the range high, which we should, right? This is the high impact, high emotional moment here in the market. This is where the reaction should come. Now, based off this, we have to start judging what is our possible trade. We look at CD, it's still caca in my opinion. We're sort of pushing higher. We are throwing wicks off the highs. Price is pushing higher, so it's sort of moving exactly with price here. We're sort of just getting right at that time, 7-8 minutes into the market where CD starts rolling out and it starts doing things that are a little more clean. With the picture being a little bit dusty still, what I would want to see is pull back, push up above these highs, large sell imbalances above the highs. Then CD comes into play and gives us what we want to see, which is, oops, sorry. If we push above these highs, CD stays down here, and then we grab imbalances up into the highs at our area of interest, which was the high of the range. So this is what I'm looking at right now. And if it wants to pull back, break highs, and stay long, then I look for longs back into this 40s area. If you're looking for longs here, to me, this pullback isn't deep enough for a long. You do get a double imbalance here. We're not into an area of interest, but if you do take a trade like this, you're looking to target the high of this range, which is going to be like 5 or 6 points. So if that falls into your playbook parameters, you could try and scalp something like this off. For me, it's just not enough. Why can't I target, people are saying, why can't you target the 40-50s? I mean, you can, but at this point, right now, this point in time, the market has told us this is as high as I want to go. The auction's vertical, it's not horizontal, right? The auction moves up and down. If it's capped out here, and this is the highest possible price that we've seen in most recent time, why can we say our first targets are above that price? It doesn't work that way. It's like the vehicle market. You go online and you're looking to buy a car, and this is the most expensive car in the category that you want to buy cars in. So how are you going to sell that car if you're listing the car for $10,000 more than the most expensive car on the market? Likely you're not going to be able to sell it until prices change, the market proves that we can trade higher, then you can look to sell higher. So double imbalance trade off this pullback worked. Not my ideal, but if you took it, this is absolutely target. Mark out this, this isn't super high volume on the 15-minute here, but this 35 is like pullback area, right? And this is sort of where we pulled into off this volume. I'm actually getting rid of it because I don't even want to play it. Struggling through the highs so far, and it's sort of the exact trade that we looked at, right? Or we talked about. CD's not breaking the highs yet. Prices through the highs, but we're not getting a lot of sell pressure or any sell pressure, right? I don't see any really big imbalances here. Here's one that's starting. CD's really close to the highs here. I do see some selling coming in on the tape. Let's see, maybe if we see a sell imbalance here that sticks for a second, we can get like a quarter size or a fifth size starter on. But right now it's just not looking like sellers want to participate in this area. Here's one up at the top. CD's breaking through the highs. Bigger, I don't want to say bigger risk trade because we're only in a quarter size, but chances of this trade working out is much slimmer. But this is sort of exactly what we wanted and exactly what we talked about previously. So I'm on for a quarter here. Stop above the highs. I always go whole dollar and then one tick above the whole dollar above the highs. So 44 is the whole dollar. I'll go 44.25, and we'll just see how this irons out. Quarter size, and we'll risk 2 points on this.
Yeah, I like this. I'm in with you too on the gap fill. Gap filled at 42.25. Gap fill from overnight with that over the pivot. Like it.
So because we're in quarter size, I'm not going to get super antsy to get out of this trade. If we get back down to low of day, the 20s, we'll just take everything off the trade. Actually, I'll just put an order in now for this. Buy in front of low of day. Because we're in so small, if we don't get an ad, I'm just going to let this thing run and say, okay, I want low of day. If it doesn't give me low of day and it stops me out, we stop out for a quarter, take a small loss, reassess the trade, and move forward. And this is what it comes down to when we're looking at the charts. We have to look at the very simple things. Where do we want to play? Where do we want to place a trade? Levels, high volume areas, areas of interest. Well, we identified that. We identified a rejection. We identified that CD was too strong here and we weren't getting lots of imbalances here, sellers participating. So we mapped it out and we said, if we pull back in, break the highs on a failing CD, and we get an imbalance, this is where we want to look to take the trade. So because we had that in our mind going into this trade, we could click the button on this relatively easy. And now our stop is above the highs where no auction is printed. So technically, we're in a safe trade. And at this point, the trade works or it doesn't. You stop out or it starts working in your favor and there's absolutely nothing you can do about it. If you're in this trade, don't micromanage it. If you're in this trade full size, somehow, some way, I don't know how you would be. I'll be targeting this 50% pullback area, which is going to be in front of the 32. So I go like 32.75, 32.50 for a piece. Then low of day. Then these lows right here. No, is it those lows? Nope. These lows down here. The 07. So I'd be going in front of like 08, maybe 08.25, 08.50, something like that. I don't know how you would be in full size, but in the event that you are, that would be my idea. So at some point on this trade, like I was up 4R already. I mean, are we looking to like peel this off and freak out and like, no, what's the trade? The trade is, if the trade works, we're getting back down to the lows. If the trade doesn't work, we're just simply in the wrong trade. We're going to stop out and we're just going to reassess the market and move forward. So on 5 contracts here, what am I going to lose if I lose? 50 bucks. At some point, I was up 220 bucks. Something like that. Are we going to freak out and get out of the trade? No. Because the trade's not based on money. The trade's simply and strictly based on what the chart's doing, the areas we're looking at, where price should ebb and flow to and from. And we've simply got to be right not a lot of the times. Like, we don't have to be right at all to do well.
Would the imbalances around 38 there been a good area to add to the trade?
Um, if I'm going to get ads, I'd want to get ads back up in the 40s. These are good areas to add based on what's happening. This is the problem with getting an entry that's so good, is if you get an entry like, what's our entry? 42. Now I start adding 38. This is position dilution, right? So now you're going to dilute your position, and especially with futures and FIFO, we're going to continue to move our averages down. You can absolutely add here. You're going to expose yourself a little bit more because you're adding 4 points below your entry. Um, it's it's a shaky situation. It's not wrong, but you're applying some additional risk here.
I think, in my opinion, like for me, I would add above 40, 40. That's where I would start looking for the ad. Ideally closer to 41, 42. But until 40 breaks above and then fails, I would not add to that position. For me, at least, that I don't think that makes sense. Because, like Dave said, it would just dilute it.
Makes sense with all the space to go back and retest.
Now, if your plan and if you back tested it and you added there, but you would add again above 40, 40, and even if it breaks higher, you're still adding because maybe you're trading like one or two MES contracts every single time, and your goal is to get some type of average up to 10. If that's your plan from the get go, right? Like if that's what you plan for, then that's fine. But I would first plan that out and test it first before you do that. So like if you add it at 26 or something like that right now, right, your average would be somewhere like 39, or you'd probably be like break even or slightly red maybe even instead of waiting for it to come to the ad if there is an ad.
Super squeezy here. So now this area here, if this holds, if the shorts can hold this down and we don't break high of day, these longs are screwed. If we make a new pivot low, we're seeing low of day guaranteed. If these longs keep this pressure up right here, we're just breaking high of day. So again, you go back to like the risk versus reward standpoint, right? And I'll pull this up. This is Journalytics. This is the software that's journaling everything for me. So this is the month of August. So my win percentage is like below 50%, but we can keep our P&L curve steady. We're just steadily growing as the month goes on. We missed a whole week of trading in this month as well. How do we keep this growing steady? We can make so much more on our winners than we do on our losers. But how do we do that? We don't get scared of something like this. Like if this trade comes back and stops me out, so be it. The plan was I'm only in a quarter size. I have to hold to XYZ, right? Or we pop back up in this area, get an ad, get bigger close to our stop. And now if we start getting bigger, like for example, if I can add a lot up here, I'll look to take a partial down in this area or back into the 32s. If we can't add, we stop out for quite literally a microscopic loss. All the while giving this chance a trade to really play itself out and not interjecting with human emotions and not freaking out and saying, I was up 400, now I'm only up 112 bucks. Like, no. The market is designed and devised to do exactly that. It's to pull on the strings of your emotions because it's specifically built to counteract every piece of human psychology and emotion and go against every single thing that you feel, see, touch, and smell. Okay? So we've got to find a way to get over that hurdle. The way to get over that hurdle is have a clearly identified trading plan that says click the button when this happens, don't touch anything when this is happening, and if you see this happen, click it again, get out here, do whatever it is. And all of the rest in between is simply noise. to confuse us and put us on an emotional, this emotional tip of the iceberg that's so fragile that if someone sneezes, you freak out, click the button, get out, which is not good.
Bad we didn't get an imbalance above 40 there.
That's a shame. Because this is where we want to add, right? We want to add without diluting. So, like, we'll go back, and, like, I mean, if you add here, this trade is still live because you still have to stop out above high of day. But now you've gone from 42, added 38, you diluted, now you're 40. This is where you really put forward that max emotion. Right now you're like, shit. And you're panicking, even though the trade still isn't wrong. It still hasn't proved itself wrong, which is above high of day. And what I'm looking at now, too, is, okay, based on everything we see, if this trade, or if this breaks above high of day, is CD likely to fly above high of day with it? At this very moment, I don't think so. Does that mean I'm going to hold my stop? No. Or hold my trade? No. I'll stop out of it, but my stop is the emotional moment in the market, right? It's another breakout of high of day. It's a possible failed breakout. It's where buyers and sellers are interacting based off fear, emotion, greed, all that jazz. So what I'll do is I'll look for another trade over high of day. If we get a high of day break, CD's diverging, we get imbalances over the highs, maybe we just got it wrong here. Maybe this is the trade here. And then if we try this again and this fails, then we sit back and we really reassess the market and say, okay, maybe this just is a long. Or maybe it's not a short. Or maybe it's not a long or a short. Maybe there's no trade. So you can't be super fixated on your trade when you're in it. Just keep thinking about what could happen, if this happens, why is this happening, yada, yada, yada. So we stop out of this, right? We go through high of day strong, no imbalances. There's a few fighting here at the top. CD's not breaking through the highs. We'll see what we can get. That's actually a strong break on volume. Big orders up here. You've got 1,000. You've got this big imbalance up at the highs. If we go for a push of this candle here again and we fail it, we could be interested. For one more try. We don't continue trying to short this thing on the way up. I'll try it twice and that's it. If you try it twice and you're on the wrong side, you have to go hands off and just look at the market from an objective standpoint now. Zero bias. Where's our next HVC? It's up to the 54s and 55s, right? So if we're playing this, we're strictly playing this still based off this high of day break. That's breaking, failing, breaking, failing. And we go hindsight trade this and we say, oh man, we lost 52 bucks on this trade. We could have covered everything here and made 250. That's not how you look at a trade. The trade hasn't worked. At best, if you were in big, you got a partial at the 50% pullback on the 15-minute initial balance. Outside of that, we're on the wrong side. That's it. These imbalances, this imbalance needed to be about 2 or 3 ticks higher for me to take it. I usually like to go 6 to 8 ticks from the highs. So like a box like somewhere in here. And like this just came shy. Why? Because if I hit the button, I want to make sure my stop is reasonable within this range. So if it went up here and gave me imbalances in here, I could hit the button, have my stop above 40.25, and be around that 2-point stop. Does this mean we missed the trade? No. Heck no.
That's a very weak breakout too. There was a huge bid imbalance up there. I'll post it. I think it's gonna pull back probably a little bit more, grab some more before it moves down. If it is gonna move down.
When I saw this 299, I wanted to see something right here. So if you get that like double imbalance right here at the highs, you can hit the button at the highs and your stop is nothing. But we didn't get it. We ended up getting them lower, which is sort of just out of the range of where I wanted to play it. As for longs, not for me right now. All I'm looking for is a short right now. I'm looking at this chart, low, low, CD making lower lows, price holding higher. CD it was peaking over the highs. When it failed, it got sucked back in. So all of this is telling me like price is trying to trend up here. CD is disagreeing and saying, I want to be weak right now. So if I go, where is this thing? Right here. Just by this, by, I don't know, something like this. By trend, by price, like this is our trend channel right now. We're like slightly trending up. So best case scenario for us is we hold this, we push back up sort of into these highs, into this area. We get sells in here with weak CD, and we can get short here. Why? We want to get short at the extremes, right? We missed the short here, or it just didn't give us enough pieces to the puzzle to get short here, which is fine. It just wasn't our trade, it's someone else's. For me, I can't short like this. Like if I short this, where's my stop going to be? Where's my target going to be? So the trade's only wrong if it breaks high of day. And it's only right if it hits low of day. So if we're short on the trend break, for example, what is this? Is this a long or a short? That's a long. Short. So if we're high of day, say short at trend break, what are we doing here? 0.96. RR, like, just simply doesn't make sense. Just don't take the trade. 90% of the time, we're just going to wait and do nothing. And like, I truly want this to be a long because for me, like overall, there's like value here to get long. But the thing is, like I said on the bigger picture earlier, I do want the 3900s. So after this big wash here, you expect some buyers to try and be buying this up for value. But I think that's the obvious play. Like in my mind, buyers like, oh my gosh, we're down so much. This is value. I think true value is going to be down here. So all of these buyers that are buying it up are just going to get wrenched one more time, and then we're going to be able to hold and go. This buy just feels way too easy and way too straightforward. It's kind of unfortunate that we couldn't get a piece on up here because we're at first target now. Now that we traded so far above high of day, what did it do? It actually made the gap from one of our targets, which is the 30s, that much bigger. So now we're getting short at 46. Now we've got like 14, 16 points down to this target. So we could be peeling some off here if we're short from the highs. We were literally like 2 ticks away from being able to get into this trade if this 117 is up at this 46 or this 292, we can hit this trade with really good RR and be up, 8 or 9 hour down to that 50% pullback area. But we didn't get it, so we wait for the next one, which is a push up, get weak into this area again. Back to basics type trading. What would this do? It would push up, pull back, push up, something like this. Okay, this is like the first pattern you ever Googled, right? Like Head and Shoulders. And like, why would it work out? Because we got rejected here. We're getting rejected here. 30-minute initial balance high, 15-minute initial balance high. Like, this is the wheelhouse zone for me that I would want to trade it within. Also at an extreme. It's a really tough buy down here. Even though we're at an area, like the 50% pullback area, you could arguably be buying this, targeting the highs and get good RR. But CD is extremely weak here. We're breaking below this trend. Like, to me, there's just, I don't want any of it. On the way down here, I like this 15-minute HVC we put in here, 37 to 38.25. Just right in that area. We peak above here. Still tough trade in here. It's a diddle in the middle, but it is an HVC, so we'll see if there's a reaction there.
Anybody get short up there too by the 46 area, 46.50? I knew you missed the day, so I didn't get back in that. Anybody else look it up?
Not I. So here it is too. I didn't know this refreshes live actually. This is pretty cool. So this is calendar month of August. This is today, the 29th. Look, we were up almost 300 bucks at one point. After commissions lost 74. What are we gonna do? Go back and say, we could have just made 300. No, it's not the trade. It's just simply not the trade.
Money, dude.
Yeah, like it's not. It's not the trade. And it's August. Oh, and it shows my win rate right here. 45% win rate. So we win less than half the time, but in August, how many trading days did we trade? 4, 9, 14. This on our 15th trading day. As for winning days versus losing days, and this is counting today, which is a loser right now, we've got 12 winning days and 3 losing days. So we're on a 75% win rate for our trading days with less than a 50% overall win rate. How does this work? It's just good trade management. That's it. Here's a push back to the 37, 38. Little reaction here. Did get an imbalance. Again, if I'm short here, what are my targets? And realistically, what's my stop where the trade fails? It's tough to say. You could scalp this trade. The only trade that's right here is a short here, a stop really close, and a target down here. So you're making, $7, $8, and you're risking maybe 1 or 2. The biggest hurdle to get over in trading is just the patience, because people think like, I'm not doing anything, I'm not making money. The market is simply a device that transfers wealth from the impatient to the patient. So if you want to do things and be impatient, well, do things and be impatient. I mean, you might as well just send your money to someone, right? Because you're likely going to lose it. In the midst of my rambling, double imbalance here. If you're short 37.50, stop over 39, you got like a 1.5 stop. You're looking for here and possibly low of day. Nice little scalp trade or scalp attempt. Scalps are less likely to stop you because they'll work faster, but I still want higher. And if I don't get higher, I don't get higher. Is what it is. Let's look at the day overall. Are we trending? No. Are we chopping? Yeah. What do we do on choppy days? Play the extremes. Short the highs, buy the lows. Right? This is like all we want to look for. We don't really want to diddle in the middle. We haven't established a good trend. Could be up, could be down. Who knows? In the middle of all this, I'll look for big pivots like this. If we can pull back, push up, break pivot high, CD stays weak, and we can get good RVR to a target something like this, then maybe we can take that trade. But I still really want in here. Nobody with any sort of substantial money in the market is likely executing large orders here. It's just not the time and place in the middle of a range. So CD pushing strong with price. No interest in shorts here. And actually, CD relative to price now, if we look at CD here and we look at the highs, CD is closer to the highs than price is. So if we do get up here, CD might even be through the highs, and our short up here is not a short anymore, which is also fine. All we can do is plan for what we think and then trade what we see. That's it. Ooh, nice little squeeze. If I go back here and I look at our HVCs on the 15, which is typically going to show us better volume, there's no volume up at the highs, which also red flags me too. It's like, if price does get all the way back up to the highs, are we going to be able to hold it down? Maybe not. And like I said, as we start driving to the highs, look at price below the highs. CD's already trading above the highs. So what's a possible trade now with the current, like the very current market situation right now? What could be a possible trade? Pivot low, CD strong. What if we pull back here and we flirt with these lows again and we dip below the lows and now we target high of day off this area? Well, we could be getting along at the 30s and targeting the 47s. So make 17 bucks on 2-point risk. This could be a trade. CD saying we're strong. If we look at 15-minute chart right here, we've got a little bit of volume down in this area. 30-minute, a little bit of volume down in this area. So this is a possible idea here.
weird what's happening right now too, based on what I'm seeing. Just pointing it out on that candle at 10:11, big push up, um, then failed, and then the volume jumped by like 20 to 30%. It looks like a lot of people were betting on pushing the market or breaking out. Some people may have gotten stopped out. Some people may still be in it, but um, probably based on what I'm seeing, about half. Um, really weird position right now. So like if you're trading here, you're just gonna get chopped up, like Dave said. It just wait for the extremes. But it's just interesting to see that there's so many people, bought there because there was more buying imbalances and selling imbalances on that candle yet. So terrible.
So this is essentially the new range that we put in on the day. So if we're in a range, again, I'll repeat it, right? We want to buy the extremes, sell the extremes. Now, by waiting for the buy at the extremes, once we break the lows, we don't just randomly buy, right? We wait for our puzzle pieces to come together. Do we have imbalances? Do we have divergence? Are we trapping? Yada, yada, yada. Yeah, right. I appreciate the kind words, man. Just keep trucking forward, dude. Price pullback here over 50%. CD holding very strong. The buyer shifted a gear for sure. Still in a range though. This is exactly how we can keep ourselves out of bad trades too. And I said it before. You trade for the morning session, 30 minutes, an hour, whatever it is. And then you go back and you look at the market and you just say, oh, the overall market was chopping. That's why I got chopped up. Well, if you can identify that the market's chopping in a range, you can keep yourself out of the trade before you get chopped up. Here we go. We're back into this area here. CD is extremely strong. We don't have HVCs. What I might look for is if we get a high of day break, what's the reaction into the 50s, into the mid 50s, 54, 55. So this is high of day pressure here. Buyers coming in, not a lot of sellers showing up. Tape's printing blue. No interest in turning this thing around right now for me. If the freight train has leave the station, we just let it leave the station and go visit the next station.
Tesla was a really nice little day trap, by the way. I haven't looked at equities that much this morning, but
Let's actually look at those now. So let's start with, we know ES, we've been looking at ES. NQ hasn't broke high of day, which is interesting. That sets up a red flag for me for ES actually. Tesla still within a range as well. It did have a nice low of day trap like Carlos said. Apple ranging, Microsoft ranging, Netflix trending higher. Netflix has been doing this lately. Facebook ranging, Nvidia ranging, Amazon ranging, Google ranging. Okay, seems like there's a lot of things ranging. So what's our expectation on a day like today? Not very much. Win small, lose small, don't trade. We gonna knock anything out of the park? Probably not. ES going for highs again. NQ looking at highs now. Few imbalances there off the highs. Drop that. Previous high of day. Delete that. I wish just push high of day a bit more, because if it push high of day a bit more into the 53s, we could look for the exact plan that we had before. Pull back, push high of day on weak CD, imbalances into the HVC, trap, high emotional moment, short, off the 50s, and look for a good roll. In terms of puzzle pieces, one single puzzle piece on this trade. We do have a 27.4 imbalance. We're not in an HVC. We're not trapping. CD is not diverging. So if you trade big enough where you can have like 5 lots on your trade, you could try this with like 1 lot. Why only 1 lot? Well, you just don't have enough in the trade so far. So our whole idea earlier when we talked about off this push, buyers starting to show some presence here and get strong. So our long below the range was super valid, right? Because this would have been target. All we needed was below the range, hold higher, get our piece of the puzzle down here, get long in the 30s, and we're targeting 47s. Trade played out, just didn't give us an entry. It's like a trend day. Trend days are the hardest for me. They go like this. And what do? They don't give you an entry. They give you 5-point pullbacks all day, and they keep ripping higher. So everyone looks at the chart and says, ES moved up 100 points. Yeah, but where'd you get in? Anywhere. I would have bought here. I would have bought here, 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 here. It's bad. No, you wouldn't have bought there. And if you did, you're targeting 5 points. You're not targeting 80 points. The best days for me are days like this where we're ranging, identify the high, identify the low of the range, identify where buyers and sellers are situated in the trade. We get the high emotional, high impact moment right here where everyone freaks out. Shorts get short, longs stop out. Big money uses that as liquidity. They buy, they go for the highs, and they break the highs. These are the days that we make money. Or I make money. I shouldn't speak for everyone. A lot of imbalance into these highs here. Let's see what this high of daybreak is. It looks weak. It's in front of the HVC. I wish the HVC was like right here. I really do. If we try and pop again and we get another sell imbalance close to the highs, I'll put on a single lot. Still holding the highs. What do we got? Tesla. Going for the highs too. I'm going to try this super small. We'll just go stop over 52.25. I totally expect this to break the highs and get into the 54s, but we'll try it with a quarter. Apple pushing, Microsoft pushing to the highs, Netflix failing, Facebook failing, Nvidia looking weird, Amazon failing, Google failing. NQ going back for the highs. You know what I'm going to do here? Actually, ES is only 51.25. That's the high. MES popped the high by a little bit more. I'm going to base my stop off of ES right here. I was wondering why my stop was 3 points. Sometimes when you get a move through a high or a low, MES will move away from ES by 2 or 3 ticks. if this does start working in our favor, big area that price could hold is down at this area. I sort of want to target this, given that our lot size is so small right now. Again, small loser, I don't care. Dave, but you're going to take 2 losers in a row. I don't care. With a 40% win rate, I have like a 10% chance of taking like 12 losers in a row. It bothers me 0. Dum, 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 dum. I've got to close my mic here in 6 minutes for a quick call, like I said earlier. Maybe Carlos can take the screen share for a bit in a few minutes. We'll see.
Sorry, Dave, I was listening to a little bit of music. What you said?
No worries. I gotta close down my mic and screen share in 5 minutes for a call. But if you want to take it over when I kill it,
Yeah, sure.
cool.
Just let me know.
Scrolling through the big names again. Amazon looks faily. Nvidia looks really wicky at the highs right now. Facebook 50-50. Netflix failing. Apple failing. Microsoft still putting pressure into its current range high here, but looking wicky at the highs. Tesla wicky at the highs. Yes, we know what it's doing. And NQ. This is a big thing for shorts here. It's like a feel-good moment for shorts. This was NQ's 15-minute initial balance high, opening drive high. We're failing it. So if big names, Tech, NQ can fail this, I don't think ES has a choice but to follow suit. But right now, it's just, let's just say this is a 50-50 trade here, right? 50% this trade's going to work. Dave, why do you take coin flips? Because if we can be short here, risk here, make here, and I'm winning 50% of the time, it's the same thing as me telling you, listen, we're going to flip a coin, heads or tails. Every time you lose, you give me $100. Every time you win, I'll give you 1,000. We're going to flip the coin all day, right? There's absolutely no way you cannot flip this coin because you know it's a 50-50 chance you're going to win $1,000. And the other half of the time, you're just going to give me 500, so you just flip the coin all day. Could you lose $300 in a row? 6 losers? Heck yeah. Do you know that the next time you win that flip, you're going to make 1,000? Yep. Same with trading. Super awkward spot up here, though. Okay, so since I have to get on this call, I'm going to kill this order. I'm going to OCO it. I'll still go above ES high, which is above 51 and a tick. So 51.25. Let me just put this out here for now. What are our targets? Let's target 34.25.
I like that. I literally just said that.
Yeah. Okay, so visually on the trade, we lose this, we make this. We don't have to win a lot, right? If it works, it works. If it doesn't, it doesn't. We just simply move on. Oh my gosh, but guys, I'm up like $150 now. Who cares? Okay.
What was that target? I didn't catch that.
Sorry, it's 34.25 for me. Trade works or it doesn't at this point. I'm going to kill my mic, kill my screen, and I'll be back soon. Okay, guys, target hit here. I'm on a meeting right now, so I'm going to wrap it up here. But that's our target into that 34.25. Really good trade. We didn't get full, but we ended up getting targets. Give me a few minutes and I'll chat with you guys soon.